Hello, I'm John Cribb, Greene Associates, and I'd like to talk for a few minutes about the newspaper market in early 2009. Um, right now, the market for newspapers and publishing companies is uncertain. Uncertain being code for nobody really knows exactly what's going on. Certainly, less deals are closing. What is selling is small daily newspapers and solid weekly papers. Larger papers, metros, are just not selling currently. Prices are modest at 5 to 8 times trailing EBITDA, certainly well below where we've been in recent years. This typically is 50 to 100% of publishing revenues. Our buyer groups tend to be family-owned companies and individuals, and these are companies that kept their powder dry, have not laden too much debt on their balance sheets, and this is opposed to the larger media companies which aren't making acquisitions right now. The reason for this, primary reason, is a lack of conventional finance. The traditional lenders just aren't lending in the newspaper space right now. Buyers with excellent credit even are finding that they're having a difficult time with funding. If they go back to their banks are changing the deal, renegotiating their loan terms. So even buyers with really good credit are having a difficult time with conventional financing in this market. This has created a return to seller finance newspaper sales. Now, seller financing was very common for small newspapers for many years, but hasn't been used much with larger papers. This is going to change in 2009 and going forward. There will be more seller finance sales. And seller financing is when the owner of the newspaper loans the money for the purchase price to the buyer. Now, terms on seller financing, typically 20 to 30% cash down, the balance paid over 5 to 10 years with interest of 5 to 7% per annum. Now, there's some advantages to seller financing. The seller receives interest on more of the purchase price. In a cash sale, the seller pays taxes on the sale and then has the balance to invest. In a seller finance sale, the seller gets his cash down payment and has more purchase price to invest and earn interest on. And the interest rate is considerably higher, typically 5 to 7% rather than 1 to 2%, which most investments yield today. And probably the biggest advantage of seller financing right now is it may be the only way to get a transaction completed. Now, there are disadvantages too. There's a chance of a buyer default. If the buyer defaults, the security the seller has typically is the newspaper he sold, so he will take the newspaper back. Most companies don't want to take newspapers back after they've sold them, and that there's a chance that the newspaper may be damaged as well. Also, disadvantage is the seller does not receive all his cash at closing, so if he had other projects or investments he wanted to use those funds for, he's unable to do that. So, summary here early in 2009, deal flow is slow, but some transactions are being completed. Prices are well below recent years, typically now at 5 to 8 times trailing EBITDA. And seller financing has returned as a sensible deal structure in some cases.